There's something huge happening for Tesla stock, and this one you will want to watch. The price target for Tesla stock was increased from $212 to $305 by RBC Capital analyst Tom, but the reason for his increase is particularly interesting this time. Tom is a fairly decent analyst. He was just on TV, so let's take a look at the full segment.
You were out with a note this morning that made a lot of interesting hypotheticals about how big the proposition is for autonomous driving for Tesla. I mean, you make it sound like robotaxis are going to take over the world and Tesla's going to have a big market share with this. Like, paint for us this future.
Yeah, and I think what's really pushed a lot of this to the fore is the deals that they've struck with Ford and GM, basically opening the supercharger network, and effectively these two OEMs coming to Tesla and choosing their platform. And I think this shows how they could sell software to other OEMs.
In other words, one more reason why Tesla stock perhaps has been doing so well lately is not so much because Tesla will make money from supercharging, although it will, but Tesla stock will just not 10x from the revenue and profits that will come from supercharging. But what could make a huge difference is Tesla licensing FSD software and overall their tech to other companies as well. And some people are starting to finally realize that. It took a while, but they are now realizing it.
The reason why robotaxis could be so transformational is their ability to save literally millions of lives. I mean, everybody in this room probably knows somebody who's been affected by a car accident.
So far, I witnessed 3 car accidents with my own eyes, and one of them was really bad, and I would never want to go for that ever again. And one of the biggest reasons why I want my family to drive Teslas is because these vehicles are just so much safer than anything that is out there. Look at this data from Tesla. This is the United States average, and these miles that you see here are miles driven per one accident. The one in the lighter blue is Tesla vehicles not using autopilot technology, and this is Tesla's using the autopilot technology. And you need to compare it to the same quarter to really see the difference. Or if I just scroll down, you see that these two lines, the gray one and the light blue, they basically just stay the same. But you look at this dark blue line and it is clearly getting much better. Even though you can make the argument that, oh yeah, most of the miles happen on highways, okay, but even on highways, if you assume that 100% of these miles are on highways, which that's not the case, but even if that was the case, clearly the system is getting much better as it is improving. So if you care about your family's safety, make sure that the next car they buy is a Tesla. Make sure that you show this to them. But what is really surprising is that even the mainstream analysts are now starting to talk about full self-driving and robotaxis. Take a look.
Saving trillions of hours, opening up opportunities for mobility to the disabled. There's so many countless reasons why cities in Europe and China, for example, are already talking about banning private cars in the future, saving space and real estate in the cities. There's so many great reasons, and why regulators, I think, ultimately will push this. Now, this is far in the future. I do caveat that. But when you do the math on this, the potential for profitability of this is massive, especially versus just a car company.
If Tesla did not have full self-driving going for it, I would still be invested in Tesla, but I would not be putting 100% of my stock portfolio into Tesla stock. The opportunity is huge, and it will take a while for everyone else to figure it out. And for analysts, well, as the stock goes up, if you want to remain a Tesla stock bull and you want to remain in the news, then you have to start adding the robotaxi valuation into your model. Otherwise, you're telling other people to buy Tesla stock, but your price targets are below where Tesla stock actually is, and that makes you look really, quoting or paraphrasing Gary Black here, foolish.
The point you make about robotaxis and the potential for autonomous vehicles, I mean, that feels like that's an argument that's been around for a while, and the timeline keeps getting pushed back.
To that, I would like to say, yeah, it has been around for a while, and only now some analysts are really starting to understand it and really see it. And that is a big moment for Tesla stock, and it's a bit of a paradigm shift happening here for Tesla stock investors in front of our eyes. And ChatGPT is definitely helping here, because before, You could talk about AI coming and taking over the world, but now you can sort of really see it and understand it firsthand. You can go to ChatGPT, ask it anything, and it writes you an essay about why Gordon is going to be terribly wrong about Tesla stock, and it can put it in a poem too. Gordon, my dear, your doubts were misplaced as Tesla's value skyrocketed, leaving you disgraced. Through renewable energy and self-driving dreams, Tesla stock surged higher, bursting at the seams. It is one thing to sort of hear about it, but it's another thing when you actually go in and you type something in and then you enter and then it just spits it out for you in real time and it's all original, never been done anywhere before. Pretty good. Full self-driving will also have that moment where it will blow everyone's mind and it will be rather sudden when it happens.
But it feels like the approach from Tesla has changed. It used to be a lot more closed. This idea of essentially partnering with Ford and GM points to their now willingness, right, to be able to work with partners. How does that open up additional levers for the company?
I'm experiencing a weird emotion here. I am shocked, but at the same time, not really. I am also at a loss for words, but I have a lot to say. Tesla was never opposed to working with other automakers. In fact, Tesla welcomed all other automakers to work with Tesla. It was all of these legacy automakers that were too cocky to even try to make a deal with Tesla because who needs this little Tesla to work with them? They know everything. They will be the winners and Tesla will be the loser because Tesla does not know what it is doing. They did not want Tesla. Tesla always welcomed them.
I mean, you're exactly right? People thought it was a walled garden of sorts.
Because no one else wanted to come into that garden.
Elon Musk said on his shareholder meeting, he said flat out, like, we want to be like Android and really open up this software to everybody. My modeling that I did this morning for my $305 price target only assumes that they reach like mid-single digit percentage penetration on robotaxis in China and Europe, and only 25% penetration in the US. It's really through licensing. That's what's driving the story. It's only them and maybe a couple of other folks that are really pioneering and leading the charge on this. Just look at the FSD software that we have today. They're the only game in town that has as many miles on the road.
It was interesting to see him speak and sort of, well, I won't say contradict himself just seconds later, but there's certainly a lot of room left to increase the price targets a lot more because he just said there are a few companies only that are really innovating in the space. And then seconds later, he says, but Tesla is the only game in town. If there are a few others leading the charge together with Tesla, then Tesla cannot be the only game in town, but yet Tesla is the only game in town.
But this idea of opening up the walled garden, that's the analogy we want to use, how much of that was driven by the competition that is increasing in the EV space, the price cuts? I mean, we sort of look at these partnerships as if this is an all-win for Tesla, but doesn't that also point to the needs that Tesla now has?
Yeah, I think this was always the goal, always in mind, right? It was get as many cars on the road as possible, prove the technology, and then open up and license it to everybody. The reason why they're cutting pricing is they want EV penetration to increase. If your neighbor has an EV, you're more likely to buy one as well. The real denominator here is ICE cars. And opening it up actually increases EV penetration and also increases the chance that you'll see that their software is probably the best, if not one of the best, in the entire group.
That's a pretty nice argument to hear. I think there are really two main reasons why Tesla changes their pricing. Number one is simply they just want to set a price that will clear the inventory without a huge, monstrous backlog. And to maximize demand, you want to have some inventory because if you need to wait, you are more likely to go and get another vehicle. But the inventory also cannot be too high. If it gets too high, the prices will have to be lowered. And the bears love focusing exclusively on this argument alone, but there's the second argument. In the long term, Tesla wants to have cars that are affordable, so the prices need to be reasonably low, or at least not scary to a point where it's way too high. And every bear completely fails to understand how Tesla will make a lot of money from full self-driving, and that Tesla needs as many cars as possible on the roads to collect more data for full self-driving.
And there's only a handful of folks that are really doing this. And so this industry, robotaxis, could be multiple $1 trillion of opportunity. And these guys are one of a handful of folks who are actually doing it.
If you do the numbers, it is really obvious that it couldn't just be a multi-trillion-dollar opportunity. It will be a multi-trillion-dollar opportunity. It's just a matter of time. So not could, but will.
When we're talking about your $305 price target, that's a 12-month price target. It doesn't sound like, I mean, if you're looking at a certain percentage of EV penetration, of robotaxi penetration, that ain't happening for
Long time.
5 years, 10 years?
No, actually, so
20 years?
Yeah, you're right.
Yeah.
So my robotaxi model uses a 2040 estimate and discounts it back. My FSD is 2035 and discounts it back. But even when I do that, I still get 70% of the $305 is robotaxis. Just because the value is so big. Think of how much you pay for Uber for a mile. And think of how much private car ownership is for you.
But
You're still willing to pay more.
But given that, when you increase the time horizon, you increase the unpredictability. I mean, there are so many other players that could come in and take some of that market share, no?
Sure, that could definitely happen. But how many other players have a $800, $900 billion market cap that can use the capital? Maybe Google, folks like that.
That's my question. I mean, who poses the biggest threat right now?
Yeah, I don't know if I view it as a threat, really. My modeling only has them capturing 20% of non-Tesla robotaxis. There's still 80% that can go to other folks, right? There are other companies out there. Your Mobileye, there's, Google, Waymo, GM has Cruise. There's other players out there. But at this point, how many are as well capitalized? We saw what happened to Argo last year. They couldn't just come up with the capital. You need a lot of capital to throw at this. And Tesla has that capital.
Training AI is extremely expensive, and collecting a lot of data that is not available to the public is extremely difficult and also very expensive. Only Tesla has vehicles with multiple cameras on it that will work when full self-driving is solved. So Tesla is collecting all this data. Others can just browse the internet and look up 100 videos with vehicles being driven and say, oh, yeah, we can use this data to train AI. You can do that with a large language model, because if you are trying to make a clone of a ChatGPT, you just let the thing browse the internet and there's your data. But there's no cluster of data where you can just see how cars are driven. You have to create that data yourself, unless Tesla is willing to sell it to you, and Tesla will not sell that data to you. And I think his 2035 timeline is very conservative, and he's going to be a little off on that, or maybe quite a bit off on that. I say sometime before 2030 ends, you will be able to get into a Tesla vehicle, put in a destination, and the car will be able to drive you safer than you could drive yourself. So this is a huge moment for Tesla stock, and there's a paradigm shift for Tesla stock investors, because the mainstream analysts are now realizing that full self-driving is actually going to be a big deal for Tesla, and these full self-driving valuations are now going to be making their way into their price targets. Largely up until now, full self-driving has not really been an important part of price targets, really. There are some exceptions, but I think we are going through this paradigm shift now. And that is a big moment for us Tesla stock investors. In this video, I talk about why Tesla board members are now buying more Tesla stock. It's a good video. You should watch it if you haven't yet. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.